All right. Wes, good to see you again, sir.
Sean, good to see you again too.
So today, welcome back, Hard Focus. We've got something extremely interesting where I'm going into a conversation without a hell of a lot of knowledge around what it is Wes exactly does. What I can tell you is if you're involved in the crypto space, whether you're a trader, a long-term investor, or a project, I think there'll be something that you'll find extremely interesting here. So, Wes, obviously, it's been a couple of months since we met in the snow in Bulgaria. How are you? How are you there? Tell us a bit about that. We'll get into what it is you do.
Yeah. Of all places, we met in the outskirts of Bulgaria, or outskirts of Sofia, Bulgaria. Yeah, that was an interesting project. There's a small city being built focused on blockchain specific projects, and yeah, they have something very interesting going on out there, and it's called Blockchain Valley. So it was good to meet you there and some of the other guys involved. I was really impressed with the plot of land and the plans for that city. My fiance and I are looking at Europe. We're getting our citizenship soon, so Blockchain Valley is on the list.
Oh, really? Fantastic. Yeah, I'm actually covering those guys in the series I'm making, The Real Cryptos. I think you've sort of seen the pilot that we tested the water with a few weeks ago. And obviously, a big part of the chat that we're going to have today, I'm endeavoring to educate an audience on the many complexities of cryptocurrencies, of trading, of what blockchains are. There's a multitude of things to cover. So, today I'm really fascinated to learn about where you fit into the whole ecosystem as a market maker, I believe. So Wes, maybe we obviously have got to know each other fairly well out there, and I remember some pretty fascinating chats with you. From memory, you built your own Bitcoin miner back in 2013, was it?
That's 2013. Late 2013 is when I got started, and I've been building gaming computers since I was 12 years old. Mm-hmm. So when I found out about Bitcoin and that I could start, getting involved in the production process of that currency by building slapping a few extra graphics cards on a gaming computer, I thought, what better way to spend my student loan money than to do this project?
Yeah.
And I didn't make a lot of money on that venture, but I had a lot of fun and I learned a lot. And I think that had more of a long-term indirect ROI for me. So
okay. So you've obviously got a multitude of screens behind you there, more than I've ever seen, actually. So what is it you do exactly, Wes? You're going to tell us about market making. Go from the top, and if you could really maybe start off for myself and many of my audience who range between geniuses and some of the more stupid people on the planet. So let's start right at the bottom. What is market making, and what is it that you do?
Sure. So market making is basically, in the easiest way to understand it, you're simultaneously, creating limit orders to buy and limit orders to sell persistently at all times. And anytime someone crosses that spread one way and back, you're pocketing the difference between those two orders. So there's a lot of different ways to execute that. That's obviously trying to keep it as simple as possible. Mm-hmm. But that's what market making does. And the reason and what it adds to the market is it adds more liquidity. Yep. So when you as a trader, log into Binance and you see all these, offers to buy, offers to sell in the order book, many times you're interfacing with a market maker. and a market maker is putting that liquidity in that market, so that number one, they can make a profit when you cross the spread, but number two, so that you can have a fair and efficient market to trade in, right?
Gotcha. Okay. So that's that. That's yeah. What I mean, how is this important to the cryptocurrency markets? I mean, obviously liquidity is the biggie here. I mean, can you maybe sort of expand upon this for us?
Yeah. So it's important for any publicly traded asset, but in cryptocurrencies, cryptos have sprung up very quickly. There's thousands of them on CoinMarketCap right now, and there's hundreds and hundreds of exchanges that these trade on, and the landscape is incredibly fragmented. So one of the kind of ailments of cryptocurrency is people find a coin that they're interested in and they want to buy that coin, and they make their way to CoinMarketCap and they look at what exchanges is that coin trading on, and they find an exchange that it's trading on. They register an account, they log in, and they try to market buy that cryptocurrency. And depending on the size of that market order relative to the liquidity in that particular market on that particular exchange, they might pay a price much different than they saw on CoinMarketCap. Yeah. And that's called price slippage. Yeah. And you incur price slippage when markets are thinly traded. It also makes the markets incredibly volatile. So you'll see a thinly traded market, and you might be checking, scrolling and refreshing Blockfolio, and you see a market is popping up and down 20% every time you refresh the screen. And the reason for that is that asset is probably very thinly traded. Yeah. So someone might only be moving, buying a few dollars worth of that asset. And if it's really thin, or the spread, the distance between the best sell order and the best buy order, that difference is really big, then you're just you're seeing the price volatility become very high. And, that's frustrating for a trader, especially if they don't understand kind of the market structure and, what liquidity is, what spread is. A lot of traders just log in and they want to buy or sell crypto. So when you have market makers in there quoting deep liquidity on both sides of the book and maintaining a tight spread and efficient market, traders or users, sometimes cryptocurrencies, they're meant to be bought, used for their intended purpose, and then resold. Yeah. And that becomes the friction there is really high absent a liquid market. So that's why it's really important to have liquid markets in cryptocurrency, and that's how it improves the experience of interacting with cryptos. Okay.
So how did you end up doing what you do, and who do you sort of interface with?
Yeah. So I actually kind of fell into this opportunity. I was at a cryptocurrency only focused hedge fund a couple years ago, and what we saw was a lot of our portfolio investments that we had invested in, the private sales, SAP rounds, whatever, when they began to trade on their first public market ever. So once the issuer said, okay, we're ready to bring this to the world and begin live trading. That process had really different results depending on if there was a market maker involved or not. And what we found was, what we kept seeing over and over and over again, was there was a complete lack of reputable market makers operating in the space. And there was more supply of new assets coming to market than the current market makers could cover. So I started developing some market making IP as a way to add value to our portfolio investments. If we're investing in a project, we might want to, do some light market making in that project when they come to market, to help it become successful. Because absent a market maker, the projects, you had a few sellers maybe that got airdropped rewards or at a very low basis in that cryptocurrency. They would just sell the coin at any price.
Yep.
And it might only be a few $100s, but without a market maker putting liquidity on the buy side or the bid, those assets would just tank. And that's something we wanted to kind of help prevent from happening. Mm-hmm. And drive a more orderly market, help seed the creation of that market and confidence so that other people would start participating and reduce the volatility in those early days of trading. So that's how I got started doing this. It was just kind of out of a necessity.
Okay. So I hear different things about market making. And for some people, has a bit of a bad reputation. Can you talk us around the obviously you've highlighted a number of the reason it needs to be there, etc. But why do you think it does get a bad rap a lot of the time?
So market making terminology has been abused. So it's market making has a negative connotation in many circles at this point because the terminology has been misused by a lot of bad actors in the space. And this isn't just applicable to market making, it's applicable to a lot of fields in crypto where people have abused a privileged position in the market. So what bad market making is and you see it everywhere, is where the market maker or the trader is not adding any real liquidity in that market. They're not helping to increase the aggregate depth of that market's trading book. They're not maintaining a tight spread. They're not helping keep the price of that asset on one exchange in line with the price of that asset on other exchanges. Yep. They're not doing those healthy activities that drive market efficiency. What they're doing is they're trying to entice users to buy that asset by inflating the volumes. So what they're doing is they're typically placing, they're just wash trading. And the way they're doing that typically is they're placing a simultaneous order to sell from one account and executing a simultaneous market order to buy at that same price from another account simultaneously. So they post an order and they take it, and then they go the opposite way, back and forth, back and forth, back and forth. And so when a user looks at CoinMarketCap, they see, oh, this exchange has a lot of volume. It's a top-ranked exchange, and that makes token issuers want to pay a high listing fee to that exchange because they perceive that it has a lot of users, a lot of distribution for their token. It also entices new users that if they want to buy a particular cryptocurrency, like the example I gave you earlier, if they're looking on CoinMarketCap and they see the top exchange is trading, has very high volumes that are pushing through, they're going to go to that exchange 9 out of 10 times, not knowing that, the exchange that's second on the list might actually have better liquidity and allow them to pay a better price.
Right.
So that's what bad market making is, and that's what has given market making kind of a negative connotation. And the exchanges have really abused this in a very nasty way. They'll basically even tell projects, we've seen exchanges get very desperate, and they'll tell projects that either pay for this bad market making service, or we're going to delist you. So they create kind of they've created a profit center off this type of activity.
This is IEO's most recently you're probably talking about here, isn't it? Where if you look at those patterns, they're almost identical for so many of these IEOs that launched.
Right.
So people that have been in the space for a while are probably fairly familiar with this type of activity. Has it improved in the last? I mean, I was writing articles and doing videos on it probably as recently as a year ago, but as far back as 2.5 years ago. I mean, it's nothing nothing new to us that have been in the space for a while. Where are we at right now? I mean, how are things improving? Are they improving?
So it is improving for a few reasons. One is pretty dark. One is the projects have kind of run out of money to be extorted by the exchanges. So the exchanges can say, hey, do wash trading or we're going to delist your project. But the project will say, well, I can't even pay you to do that because I don't have any money left. So the exchanges have, ran the well dry on their biggest customers. Their customers are the projects and the users that are trading those projects. And they ran the projects out of money in most cases. And this is not all exchanges, right? Not all exchanges are doing this, but a lot have done it. So it's kind of improving in that way, that it's just not sustainable anymore. The other ways it's improving is, CoinMarketCap, which was widely criticized for helping to enable this kind of racket to continue by publishing those, by not censoring those volume numbers that are obviously fake. What CoinMarketCap has done is they've added a liquidity metric that is that's now displayed alongside of if you look at a coin and you drop down on the exchanges that it's trading on, you'll see one of the columns is liquidity. So you might see in that example I gave you before, a pair has really high volume on one exchange, but immediately you'll see, if you look to the right, that it has very low liquidity. So it might have very low liquidity, and you'll look below that and you'll see, hey, this has less volume on this exchange, but look how good the liquidity is. So it's easier to identify where the real market is and filter out the bad actors that are trying to bait you on booking a very unfavorable trade. The third way it's improving is you're seeing users get smarter. So you can only be fooled so many times before you start realizing, okay, something's going on here. Let me either quit and leave, or let me figure out, what's causing this problem. So users are getting smarter. There's more reporting on it. So people are more aware that this is going on and are better, suited to protect themselves.
Right. Is it potentially also a scenario, obviously we've had a multitude of projects, sort of 10,000 accounting, I think. Obviously I feel we're sort of going through a process now where, there is some quality starting to shine. Personally, I'm not really a trader. I consider myself a fundamental investor. Do you kind of have to look at the exchanges like this as well? I mean, there's a whole heap of them out there. What would you say to, where is the evolution of the marketplace going as far as the exchanges are concerned? Do we just simply have way too many, or what's going to really take us to the next level of I wanted to say professionalism, because we're still waiting for that to begin. What do we need to happen in your opinion?
Yeah, so the exchange landscape is improving significantly.
Good.
There's still way too many out there. There was a boom in cryptocurrencies coming off of the tail end of the last bull market. same thing with exchanges. You know,
Yeah,
the
exactly.
next best idea to launching your own cryptocurrency and trying to print yourself millions of dollars was to launch an exchange. So there's going to be a lot of consolidation in that space, and we're already seeing it happening. And you know, one of the interesting kind of checks and balances is you know, we're seeing decentralized exchanges really take off and really get start to get a lot of adoption and good liquidity.
Yep.
So users are able to interface with the decentralized exchange in a very easy, frictionless way without really leaving their wallet. And
Are you talking about the
you know,
likes of a hodl here?
Kyber Network is really standing out to be the premier decentralized exchange right now.
Okay.
They're gaining a lot of market share and adoption, and they have a really sustainable token model as well. But
well, sorry, Wes, when you say a decentralized exchange, I mean, I haven't been trading for a while, so I'm not really up on the play here. So if I can just back you up a wee bit to understand where we are.
Sure.
So, you know, obviously I was aware of the likes of hodl, which, you know, for me, that was, you know, the maximalists talk about that, you know, there's no KYC involved, etc. Is that what Kyber Exchange is as well? When you talk about decentralized?
So, yeah, I'll try to make the distinction as easy as possible.
Sure.
A centralized exchange is basically run by a centralized operator. They own the servers, they own the website that you're interfacing with, they own the matching engine, they own absolutely everything. And in that ownership, they have a very privileged position of power. And we've seen a lot of exchanges, you know, abuse that power from, you know, censoring deposits and withdrawals to their benefit and to their customers' detriment, to you know, outright fraud and exit scams, to you know, forcing projects to you know, kind of do these illicit activities to stay listed. Yeah. They've abused the power that comes with operating a centralized exchange in every way imaginable. And the decentralized exchange, I mean, there's benefits to having the centralized exchange. It's very fast. The experience is good. Like, you can log into Binance, you can place a trade. It's got good liquidity. There's a lot of market makers in there. It's very efficient. There's a lot of benefits of centralized exchanges as well. But the difference in a decentralized exchange is you're basically stripping out all of those centralized functions and replacing them with smart contracts. So everything is happening on chain. So a user can publish an offer to sell a token at a certain price, and another user can see that token submitted on chain, and they can interact with the smart contract in the same way, creating an order to take that offer, and the tokens will settle via the smart contract functions automatically. Yeah. So it's a trustless component to trading. Yeah. And that comes with the consequence of, you know, it's not as efficient. There's more transaction costs associated with, you know, paying the gas fees in the case of, you know, Ethereum-based DEXs. And you're not able to, you know, you're not able to move those orders around as fast, right? Gotcha. So there's a lot of reasons why it's not as efficient and it's more cumbersome. But those, with the massive onset of kind of fraud in centralized exchanges, as well as the censoring of U.S. customers from many centralized exchanges out of regulatory fear or uncertainty, decentralized exchanges have kind of taken foot and are starting to have a place in this market. Right. So what you see happen from that is users now have options, and when users have alternatives, it gives them it's an ultimate check on the fraudulent operators because users don't have to depend on them anymore.
Right. John McAfee's launching a DEX, isn't he? Is that what he's up to at the moment?
I heard that quite a while ago. I haven't seen if it's live and trading.
I'll ask him. I'm doing a second interview with him next week.
You know, my guess is it's not faring too well, or I would have heard of it.
Yeah. Yeah, there was a bit of a song and dance about it, yeah, as you say, quite a while back. But yeah, last time we just spoke about weed, so I'll get into some tech with him this time. So okay, that's fascinating. I mean, it also sounds to me like we're actually using some of the tech that the industry we're involved in is sort of coming to the fore from an exchange at an exchange level as well, instead of all this off-chain centralized cowboy action we've had. I mean, obviously we're not here shilling or promoting any companies. You've mentioned Kyber Network. Who else do you recommend that I have a look at? Obviously the series, The Real Cryptos. I'm really trying to learn as much from guys like yourself who are the leaders in your area. When I'm getting to ultimately the space is still very much about price speculation. I'm obviously trying to highlight real use cases out there from a fundamental investment point of view and tell some great stories. But really, ultimately, we're still in that speculation. I think we've got a number of bull and bear markets to go to until we get into the actual fundamentals of use case and investing in many respects. I like what I'm hearing from you about the exchange scenario getting a bit more legit. What else should I be looking at the moment to get myself up to speed in that space?
Yeah, so Kyber Network is really kind of standing out right now. They're really capturing a lot of, they've kind of captured most of the decentralized exchange sector in terms of volumes. They're trailed now by Uniswap, which is another similar implementation in terms of the way the trading is, or the way that traders interact with the smart contracts. It's similar. That exchange is doing very well. And then there's, of course, IDEX, which is, for a long time been the top contender in the decentralized exchange sector. Their volumes have dropped off a bit, just following competition from Kyber and Uniswap. But they're still innovating at a rapid pace as well, and they're more of a performant exchange to trade on, because they're a hybrid decentralized exchange. So that's a really good one for you to look at. I'd recommend having the founder on your show, Alex Warren. He's really knowledgeable on decentralized exchange and very articulate. But basically, the difference on IDEX is they're decentralizing the most important functions of the exchange, meaning the custody of the assets.
Right.
So to deposit on the exchange, you're creating an on-chain transaction, and your funds are held in a smart contract. When you withdraw your funds back off the exchange, you're signing with your private key to initiate a withdrawal, and it's going out of the smart contract back to your wallet.
Right. So it's using state channels, something like that in that sort of scenario, I'd imagine.
Not yet, and they have a really fancy terminology for their new iteration of the exchange, which I'll let Alex tell you about that if you speak to him, because I'll completely embarrass myself.
Right.
It's called optimistic roll-ups or something like
that.
Oh
yeah. I had to look at that a while ago.
I don't know what that is, to be honest with you.
Sounds great.
We can't know everything. But yeah, so the approach there, the idea there is, safeguarding the assets is the most important component, right? But users also want performance. So it has the performance aspects of a centralized exchange and the decentralized components where it really, really matters. So that's a hybrid approach that's kind of in between. You can be fully decentralized, most secure, least efficient, or hybrid. You've got good security, good performance, but it can still be censored. And then you've got centralized exchange, which you got the best performance, the least kind of control over your fate in terms of, getting censored, getting your assets seized, getting, having the exchange evaporate in front of you, things like that. Some of the horror stories we've heard of. So
yeah, I mean, it's from a content creation point of view, I mean, obviously I've sort of gone full journalist now, because the amount of content in this space with people supposedly faking their deaths, and I'm not sure whatever happened with that guy out of Canada. I believe they're digging up his body at the moment. Is that?
I heard.
I mean, you can't make this stuff up. It's just,
yeah,
it's
yeah.
it's endless and relentless. We all want we all want to be proud of this industry that we've chosen to spend our time in. So the sooner we clean things up. I mean, on that note, I mean, sort of self-regulation was obviously the buzzword that went around for so long, at least in the time I've been in the space. When we look back over the last sort of 4 years, do you think there has been any self-regulation, and what do you see in the way of traditional regulation happening at the moment? Obviously, we've had some moves in South Korea yesterday, and obviously some very big news out of India. So do you want to maybe sort of have a bit of a talk on what you see coming? What is the landscape looking like in that respect?
Sure. I mean, honestly, it's very hard to be, to be operating a business in this space, because the regulatory uncertainty and gray areas, or onerous regulations, it's incredibly challenging. And you see companies like Binance really mastering the jurisdictional arbitrage approach to building very, very fast, putting relationships all over the world, and cherry picking, just having flexibility in terms of where they go to operate. That's not ideal, right? Obviously, you would rather probably just park your business in a jurisdiction where you have certainty and you can operate globally. But that's just not possible in this space. So you've got to be agile, and it's something that I know a lot of companies are always being mindful of, and frankly worried about. We started our business in Malta, and we moved that company. We're winding that business down and operating out of Singapore now. So nothing has changed in terms of the operations, but in terms of,
that's where I am at the moment.
Yes.
Right.
Yeah.
Okay.
Yeah. So our company is registered in Singapore.
Fantastic.
So it's a lot of work, a lot of legal bills for sure, and conversations. But to your point of self-regulation, I think there's a really good point to be made, and I know people have made this point, that some of the legacy kind of compliance procedures that companies need to follow, in terms of reporting suspicious transactions, keeping an archive of all their dealings with customers, all these type of really data and compliance department heavy regulatory practices that are persistent in different degrees across the world. Some of these, I think, are going to become redundant because of the nature of digital assets, where you can trace back to the Genesis block where every transaction is heading, right? So if you steal a bag of cash, it's probably pretty easy to get away with it, and if no one saw you. But if you steal someone,
I mean, exactly on what you've just said there, I'd
Yeah.
love to ask you this question. It is the elephant in the room for me at the moment. It's astounded me that the you know, it's not being debated more at the moment. You know, we had Matt Corallo turn around a couple of weeks ago and publicly comment immediately on it when the guy from, oh God, the name of the company escapes me right now, but he's facing 30 years in federal prison for having a mixing service. I saw BlockFi. There was some stuff going around from Matt Odell the other day, who tends to be up on the ball, saying that BlockFi were effectively passing out warnings to people looking to deposit coins with them that had had a history of mixing. So to me, there's obviously a concern with that in that BTC community that there seems to be a hell of a lot of division there between the, you know, a lot of people that feel obviously Bitcoin is something that should have a high degree of privacy or even anonymity. And then maybe you've got the other guys who are very eager to see, you know, ETFs, pension funds come into the space, institutional large institutional purchases. So there, you know, there's really quite two distinct ideologies. It's obviously how we've ended up with these other coin splits, especially in Bitcoin, but specifically with BTC and that issue. I mean, you've just said there, you know, you can trace everything right back to the Genesis block. I think that's been lost
Right.
on your average punter coming into the space, assuming that Bitcoin was, you know, you could go buy some ganja on a dark web with it, and that's how a lot of guys. It was almost a badge of honor for some of these guys saying, "Hey, that's how I got into the space." So it's been
Totally.
bit of a shock for a lot of people to realize, actually, you know, you're probably one of the worst criminals on the planet if you've been using Bitcoin for criminal activities. So, what are your thoughts around mixing? To me, it's such a defining issue right now.
Yeah, you know, I don't have, I'm sure there's Bitcoiners that have much stronger opinions on this than I do. Just philosophically, I think a user has a right to financial privacy.
Yep.
So, you know, on one side, there's ways to help you maintain privacy when dealing in, you know, cryptocurrencies, right? You know, not
Wes,
like
I guess where I'm going with this is, you know, obviously I'm a massive privacy advocate. You know, I've written many articles on this. You know, to me, you know, it was a big sort of appeal when I first got into the space that there could be this global currency, it's yours, it's unconfiscatable, etc. I still love all that stuff. I'm a really big proponent of it. But you know, it's fascinating to see where we find ourselves with BTC. You know, it's the king. It's got the liquidity. It's the one that the institutions are looking at. But yet we find ourselves in this situation right now where, you know, if I was advising an institution on should they be coming in with, you know, with large purchases of this digital gold, which is certainly where the narrative has shifted to with that particular currency. That's a concern. You know, to me, there's no real clarity around this. You've got people talking in terms of, well, if every coin is tainted as often the word used, then there isn't an issue.
Right.
So, you know, this is one hell of an interesting year. You know, where we've got the ideological issues here to address, and I think they need to be addressed. And also, you know, we're in the middle of a black, well, not in the middle, we're at the start of a black swan event here. That so many people have said over the years, you know, if we have another massive issue with the traditional financial system, then this is where, you know, BTC, Bitcoin would really maybe come into its own. Not that we wish any financial calamities to see that happen, but that's certainly been the narrative. So it's fascinating for me to see where all of a sudden we find ourselves in a black swan event, and bang, we've got this whole issue of, you know, is Bitcoin fungible effectively?
Totally. Yeah, it's, you know, I think privacy and tooling to help users maintain, you know, reasonable financial privacy is going to be a really big focus area on improving the user experience.
100%.
But you know, more importantly than that, for the first time ever, you know, we have a method of payment, you know, and storing our wealth that, you know, cannot be seized from us. It cannot be censored.
If you didn't buy it via an exchange, that's the case.
Right. So I mean, even, you know, even if and it can't be inflated away from us, right?
That's the biggie. That's huge.
Yeah, if you look at those features, you know, maybe privacy is one that people are very passionate about improving. But you know, even if you know where my bitcoins are stored, and you can say, hey, you know, you're worth this amount of BTC, right?
Yep.
And maybe that might be unpleasant for me. But what's a lot more unpleasant is you saying, hey, I can see you have this many dollars in your account, and you know, and now those belong to me, right?
Correct.
Or now those are inflated away from you.
Yeah.
So you know, I'm more of a long-term person. You know, I've been in the space, you know, since I was in university. And you know, to me, some of the concerns people have in the short term cloud the longer term vision here of what we have, which is incredibly powerful. Even if it changes, even if nothing changes from today, it's still the best alternative out there to carrying around a backpack full of gold in a catastrophic event, which obviously would put your physical person at risk. So I try to look at it like that.
Oh, I couldn't agree more. You know, it's sort of only really dawned on me in the last year. You know, it takes a while to get up to speed in this space. That's what I'm trying to help people sort of accelerate that learning curve with the series that I'm about to release in 2 weeks' time. But you know, you've nailed it there. We really are right at the beginning. I mean, we've got some great things here now, without a doubt.
Right.
But you know, the innovation that, you know, I know you're around some incredibly high caliber people and have been for a long time. So I mean, on that note, we're not giving financial advice, or at least I can't. I'm not a certified financial advisor. I guess you are. But either way, the show isn't. Can you maybe give us a bit of an insight into the sectors within this space, or even projects, if you want to, that you think are interesting, sort of medium and long term? Not from a trading point of view. That's not the chat we're having. But yeah, what do you see? What's sparking your interest?
You know, there's so many projects to be interested in this space. You know, one of the ones that, you know, we've been looking at recently, and you know, actually participating as a block producer in the testnet. It's the code base was originally an EOS fork, so it has delegated proof of stake consensus model. You know, where block producers are the ones producing the blocks, and there's, you know, just a certain number of them that achieve consensus.
Yep.
So one of those projects is that I'm interested in right now, and there's a number of them, but that project is FIO, and they're really kind of improving the user experience of interacting with cryptocurrencies.
Yep.
So it acts, you know, as a kind of a domain service, where instead of giving a user, you know, let's just say you're invoicing someone and you want to accept BTC, BCH, or Ether, and you give them 3 different alphanumeric addresses, and you create new addresses for each new customer. It's very difficult on your side. It's also difficult on the on the customer side, not to screw that up, right? So what FIO does is it allows you to create a universal domain for for your address. So it could be payments at Acheron trading, right? And then a user could we could connect any of our wallets to that domain, and we don't have to expose our public addresses to our wallet, so we gain privacy.
Yeah.
And we also don't have to manage a million different addresses for every customer. And on the other side, the customer can say, okay, like, boom, I can send a transaction through this protocol. I can send BTC, BCH, Ether, whatever currency that, you know, they specify is available to receive. And it's as simple as that. So that's, you know, I really like things that are improving that user experience of crypto, especially when I can think about my business and I can tangibly see how that would help us maintain a more efficient, agile operation, right? Just cutting out unnecessary, unpleasant, you know, back-end administrative operations. I think that's huge. And, you know, that's one that's really caught my eye right now.
Sorry, can you give me the name of that again? I'm going to go and have a look.
It's FIO, FIO.
Okay. I would check it out. What's your view on the, I mean, obviously these sort of prepaid crypto cards have been around for at least 5 years now. I'm actually having a chat with a guy here in Singapore at the moment. That's the CEO of a new one that's come along. Kind of like, I mean, this one doesn't have, you know, it wasn't an ICO. There's no token involved like an MCO. For me, I sort of, you know, I can see it sort of seems maybe some of the functionality of what you were just talking about there might be in the mix for some of these cards. I mean, it's obviously you're using the MasterCard network here, which, you know, for a lot of purists would be screaming at me at the moment. But the reality is we're still building that infrastructure, so to speak.
Right.
And, you know, while we go through these cycles of bull and bear markets, as projects are getting built out, as we build adoption, you know, I certainly see a place for these cards. What's your view on that sort of sector of the market? You know, I just know for me personally, you know, I'm going to have any investment I make is going to be in the crypto. I really often like using that term crypto, but in the blockchain space. And to have the ability of not maybe, you know, to just be able to use the thing immediately anywhere in the world, and is ticking that box for me at the moment. So I am sort of having a close look at that. What's your view on that sort of functionality and offering at the moment?
Yeah, I think you know, I think there's a lot of areas for UX improvement in crypto. So there's a lot of different challenges to tackle in that area. Making it, you know, these cards are, you know, really designed to make it easier for people to spend cryptocurrency.
Correct.
So, you know, you're holding, you know, part of your investment portfolio in crypto, or maybe, you know, it's not so relevant to, you know, to me, perhaps you, but, you know, in other countries where cryptocurrency is kind of opening up a, you know, global commerce. You know, people might be invoicing for their services in DAI, BTC, you know, whatever, and they don't have a practical way to spend those, you know, those currencies they're earning, and buy, you know, goods and services for their everyday life.
Yeah, this solves that. It's effectively the last mile, isn't it?
Yeah, so, I think that's I think it's a really good sector, you know, for just bringing the entire life cycle of using cryptocurrency to reality.
Yeah, and also I think from a, you know, an adoption point of view, I mean, I'm actually meeting this guy tomorrow for another chat. I hadn't actually looked that closely at it, to be honest. I mean, I looked at the MCO card way back in early 2017. Everyone's been quite excited about it with, you know, Netflix and so forth. Some of these projects where they're, you know, the interest rates they're paying to people and the cashbacks, it just doesn't quite stack up for me. So I'm doing a bit of analysis on what is available out there, and before I go off half-cocked recommending anything to anyone. But it's, it's been nice to purely sort of be a Bitcoin site up until now. But as I'm sort of spreading my wings a wee bit into other projects, it's I see a lot of positives happening at the moment. I think to be running around in this industry now, you got to have something.
Yeah.
The heady days of some good marketing and a white paper to make a huge amount of bucks before you disappear to a Caribbean island. I hope they're over. I hope they're over. But I see some great things happening in the space. What's exciting you most? I mean, maybe if we go back to sort of your specific area of the industry, what have been the big changes that you've seen in the last year or two? Where what's on the horizon? Obviously, you've talked about Kyber. It's been great to learn a bit about the decentralized exchange. So maybe if you could tell us a bit more about what you're seeing going on.
So, things are definitely getting interesting again. So,
They are.
the past couple years have been a very big filter on a lot of the fluffy projects that didn't have a sustainable
embarrassing is another word that comes to mind.
Yeah, I mean, it's been quite tragic for many teams, and a lot of people that found themselves in having a lot more financial backing than they really knew how to manage in a hyper volatile asset class.
Yeah.
So there's been a really big kind of natural filter that's been placed on the market from the volatility of the market cycle. So what we're seeing now is, the teams that we're working with that are coming to this market, the new entrants, are really bringing like really, really interesting projects. And they're bringing a new level of professionalism and seriousness that we haven't seen in the past. It's not as much gunslinging, cowboy type mentality. It's about, real professionals trying to find, opportunities to bring real solutions to the world. So that's what's most exciting for me in terms of the innovation in the projects and the projects that we're working with. In terms of the market, for a very, very long time, there was no competition on the bid in many of the altcoins. Meaning, if you wanted to buy, a project, you could throw a bid on the market and you wouldn't see anyone bid in front of you. You would get filled easily. Yeah. There's always a market for sellers. And what we've seen, the past, really in the past 6-7 months is that has started to shift. So, you're starting to see projects go bid. You're starting to see, the offer just be completely wiped out. So you're starting to see like there's an opportunity for projects to, if you're a good project, you can get adoption. The market isn't completely out of your favor anymore. And, we're starting to see outside interest pour in. So that kind of, that kind of behind the scenes inner workings of the market is shifting. And for us, that's really exciting. Yeah. For I think traders that are looking to, go long on some of these projects, that's interesting as well. Yeah. Right. So that's kind of where we're seeing things right now. Hopefully that's hopefully that answers your question.
Yeah, it does. I mean, it's it mirrors my experience as well. The reason that I'm excited now. Obviously, the last couple of years have been very tough. Especially as a content creator and having to fend off the criticism with so many out there. But I've kind of been through this before. I set up a business in the mid-90s that was very much an infrastructure company. Building the backbone, the routing networks, the switching networks for the big telcos. So that's, that was sort of the level I was playing at it. And then seeing those companies come in and build on top of that infrastructure. It's exactly the same as we're seeing here now. And there was that massive wave of utterly ludicrous ideas that just got incredible amounts of funding. They all fell over. I had 80 odd people working for me, and bang, it was literally overnight when that bubble popped.
Right.
This has been more of a sort of a slow strangulation, I think would be the way I'd describe the market. But I'm seeing now, I sort of compare it to the early 2000s, where if you're astute and you're out there talking to the right people, there's some absolutely brilliant things happening and some brilliant projects. So for me, the next couple of years are super exciting. You pick this right. If you're talking about this from an investment, from a financial return point of view, yeah, the rewards are going to be astronomical. And I think obviously we've still got a little bit of time to go for where I can sort of proudly tell my parents, yeah, I'm with the blockchain industry. There's been a lot of head shaking, but it's improving. I think this news out of India is very exciting. We'll see a lot more clarity for the institutional players to really come in here. I mean, what are we? We're still some 0.01% of the overall economy. You watch what happens when that hits 1%, and they literally have to take percentages. That's when we see parabolic action happening, and I don't think that's too far away. Certainly within a couple of 2-3 years. So exciting times. And will we see you out in Singapore? Actually, you know what? I'm involved in a conference here in May, I think it is, where the whole idea is to have the government ministers come in and talk to some of the other thought leaders in the space. It might be an interesting one to have you guys come over. I'll shoot you through some information on it.
Yeah, let me know. I think May is about the time I'll be in Europe for doing 3 months there.
Yep.
So it might not work. It might be right before I leave though. So possibly. But yeah, I was in Singapore.
Put it this way: we can't really plan to travel anywhere at the moment, can we?
No, we can't. No, we can't. It's very. It's not fun being locked, in the office. I'm itching for some travel. It's been, at least 2 months for me. So. Oh
man, I've been locked behind the front gate of the house for nearly a month. I think I've been there.
Wow.
Oh yeah. Singapore was the first place to get affected by this, and amazingly, the government here has done an incredible job. I think we had about 90 cases of coronavirus, is obviously what we're talking about at the moment, and it's barely risen. But that's kind of been achieved, well, through a hell of a lot of tracking. Obviously, mixed thoughts on that, but the fact that they're just really, the streets are empty. I hate to see how it's I know how it's affecting businesses here, but it does. It's a fascinating scenario whether we will see these cryptos, especially Bitcoin, maybe decouple from tracking the traditional markets. I mean, maybe that's sort of a good way to wind up here. I mean, what are your thoughts? What are you seeing? Do you think Bitcoin or any of these cryptos? I mean, this is a really serious black swan event we have here. Do you think they'll decouple and move with a gold?
I think I think we can. Depending on how bad this gets.
Yeah.
In terms of the virus, in terms of the equities market, when things get very when people get scared, when things get really tough, there's still a flight to cash.
Yeah.
Just to look out for your life, right? Your immediate future.
Yeah.
You're not walking, you're not going to the gas pump and paying with BTC.
Yeah.
Right. So, I think there's the flight to safety narrative, I think, is a longer term kind of phenomena.
Agree.
In the super short term, I think the flight to safety is cash.
Yeah.
But I think over the longer term, we're going to continue to see cryptocurrencies, cement themselves as an uncorrelated asset class. And I think as usability improves, that or just kind of adoption takes hold. These things take time. I don't think you can have a short-term view on this asset class. I think you're better suited having a long-term view on what it means for the world and how we transact value with each other. So I think that narrative is true, but I don't expect it to cement itself here tomorrow, right? If things get really bad. So
true. So extremely long-term bullish is what I'm hearing from you, Wes.
Incredibly long-term bullish, unwavering.
Excellent. Well, you've certainly been in the space a long time. So, I love talking to guys like you that, have been here a long time. You've got a good perspective right across traditional markets and the space, and you're going nowhere. So that instills a lot of confidence in myself. Look, I know you've got to jump on a call in about 15 minutes. So anything else you'd like to cover before we wrap it up?
No, I think that's it, Sean. I want to say that I really appreciate you, taking the time to have me on the show. And thanks for everyone that's going to be watching, for tuning in. And I wish you the best of luck, staying safe from the virus there in Singapore. And I hope to see you again in person soon. Yeah,
maybe at Blockchain Valley. I've got to touch base with those guys and find out how they're all tracking there. I'm going to leave the front gate in the next couple of days. I think, and maybe on that note, I think I'd like to say to sort of, people, I know we have a significant percentage of the audience is in the US, where you're based. I believe you're on the East Coast, aren't you?
Florida, yeah. So, but I will be. I'll be in Europe for the summer, so
nice.
Maybe I'll catch you then.
Yeah, I'm certainly heading that way. But look, it's something to bear in mind. We've been through this here in Singapore. Life has not been destroyed. It goes on. This initial shock and fear that I'm seeing from a lot of people on social media. Be careful of the hype that the mainstream media is creating around this. It is the flu. I don't think it's going to wipe us all out. But take precautions.
I sure hope not.
Yeah. And look, Wes, it's been an absolute pleasure catching up with you again, mate. And we'll speak in the near future, I hope.
Yeah, it's been a pleasure. Thanks so much, Sean.
Yeah. You too, sir. Thanks for your time. Cheers. Speak to you soon. Cheers, Wes. Bye now.